President Trump has hit his 3% growth target during his first 3 quarters. The question is how much he's responsible for it, and most importantly, can it continue? So we assume the fourth quarter comes in at the projected 3%, which is where we are now. Growth under President Trump is an extra 1% higher compared to the prior 4 quarters. Most of the extra growth comes from trade, inventories, and investment, mostly, folks, in equipment there. Increased business confidence from the president's expected policies could be the reason. And you have the expected tax cuts coming and actual deregulation. But the president has also benefited from higher oil prices, and part of the equipment spending looks to be tied to energy. Growth has also been helped by higher defense spending. There was also a big boost from trade, and that's caused by the weaker dollar and better growth overseas. Job growth strong under President Trump, up 1.9 million jobs since February, a bit less than the comparable 11 months of the Obama administration. Unemployment under Trump plunging to 4.1% from 4.8%. So the Trump economy looks to have benefited from some positive reactions in the real economy to his expected and actual policies and forces outside the president's control. True test comes now if this kind of growth can continue now that some of the policies are actually coming into place.
Don't move, Steve. We have Larry Kudlow here on set. Larry, it's hard to measure, isn't it? Because some of these measures are basically optimism measures. How optimistic are you when business owners, consumers? That eventually translates into the real economy, doesn't it?
I agree with Steve's report. The animal spirits have been rising. Confidence has been rising. As you know, both consumers and business confidence rising. Look, CapEx is really important. And
capital expenditures.
Yeah, really important. Business equipment, whether you look at factory orders or whether you look at industrial production of business equipment, they've really taken off in the last couple of quarters and have been responsible for most of the increase in GDP from around 2% to 3%. Also, profits have been increasing. You know, we had a profit slump for almost 2 years, 2014 and 2015. From about the middle of 2016 up to now, profits have rebounded and have vastly outperformed what everybody was looking for. What Mr. Trump's been doing with respect to lower business taxes and the rollback of regulations is to increase the outlook for profits, which increases the outlooks for business strength, which then goes right down the line. Employment, productivity, wages, and so forth. I mean, I've never seen anything. There must be 100 companies now that have declared wage increases, one-time benefits, higher minimum wages. I mean, Walmart, which refused to accede to the government's minimum wage demand, has now done it by itself. These are signs of economic strength. Very, very positive.
You were one of the first people to come to us and say, I'm worried about NAFTA.
Yes.
I think the president's going to pull out of NAFTA. You heard Phil LeBeau's report earlier. You have new intel about NAFTA, don't you?
I do. I'm hearing, this is subject to daily change, but I'm hearing from various sources in the West Wing that the president is not inclined to pull out of NAFTA, that instead he's inclined to renegotiate. Difficult as that's going to be, there are a lot of issues, and it's time for a retrofit, particularly with the relationship in Mexico. But I am hearing he's hesitant. You know, you talked about this on the radio with me. You don't want to play into a far-left Mexican government re-election that would make things much worse.
There's a big election July 1, and there's a hard leftist running.
Great insight, and I think the president and his advisors know that. I also think they know or suspect, as I do, that if you pull out of NAFTA, for all the reasons Phil LeBeau mentioned and plenty others, you'll knock the stock market down. There's a potential blow-up in the stock market if we leave NAFTA. We're talking agriculture. We're talking car parts. We're talking trucking, transportation, energy. We are too intertwined. Now, negotiating is not going to be easy. But pulling out of NAFTA would be worst case, would really hurt everything.
There's a lot of good stuff going on, Steve Liesman. No one doubts that. But I'm gonna find the glass half empty right now because it's supposed to snow tonight and it's Tuesday and who cares? Here's the thing.
Because you've been drinking the glass is half empty. No, just kidding.
Water.
I wish.
Water.
Quietly,
right.
The U.S. dollar, the dollar index, is at a 3-year low.
Right.
We always hear Larry say, king dollar, strong dollar.
Larry and I disagree on this.
What is going on with the dollar?
My take on the dollar is the U.S. is such a fabulous and dynamic economy that we do well when the dollar is strong and we do well when the dollar is weak. Right now, a lot of the things. Did I just hear like this groan from Larry? I think I heard a groan. Let me just finish my thought, and then we'll let that groan find verbal expression. Right now, it's helping manufacturing. It's helping exports a bit. So to me, because the U.S. economy is so dominant in the world, it's a heads we win, tails you lose situation. I don't see it as a dark cloud on the silver lining.
Why is it weak when they're going to raise interest rates?
It makes no sense. It makes
because the ECB is pulling
let me
back.
just give you one other.
Okay, but how
let me
about
give you
this?
one other piece here, which is that Alan Greenspan said this many years ago. There is no single variable that predicts the outcome of a currency better than the flip of a coin.
He also said, if you understand what I said, that I must have misspoke.
It's almost random.
Hold
it's
on.
Almost random.
Don't we need to worry? We talk about the stock market rally every day. The reason I bring up the dollar, and I agree with everything you said, is just that it makes the value of U.S. assets in other currencies worth less. Is it a risk to the stock market rally is what I probably should have asked.
Yes, that's fair enough.
And I would agree with that.
If you have a sustained drop in the dollar exchange rate, and you have to measure that carefully, the value of the dollar has to be measured against foreign currencies, to be sure. It should also be measured against the value of gold and the value of commodity prices. And by the way, I'd throw in the TIPS inflation expectations, too. That plays a role. So you're right, Sully, about the movement down. However, if you took the chart and you went back to 2012, 2013,
it's higher.
The dollar today is still way higher than it was in the early 2000s.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.